All righty. Doc here from North America. Good morning, good afternoon, and good evening. It's thanks goodness it's Friday. It's the end of the week. TGIF. It seems like we have lots of noise and lots of twisting and turning, and the end result is that as long as we're in a QE era, quantitative easing era, we're not really going to see that much damage from the interest rate and inflation situation, but let's put it this way: it will have some obvious effect on the way things are done. But overall, we're not going to see 21% interest rates. They're not going to allow anything like that, and inflation is at seven and change, 7.5, something like that. So I mean, you really, what you really should see, I guess, in an old familiar type of concept of, I guess what you say, profit and loss, inflation, growth, return of capital, that type of thing, risk. We should at least see 9.5%. I don't think we're even going to get close to that. I don't think we're even going to get close to half of that because I think a lot of this problem is more literally created as a, by just bad policies more than anything else. So I can see them pressuring interest rates up into the threes, maybe four at worst, but I don't see them going any further. And by the time they finally get it up into that area, a lot of the government policies should be changed or heading towards change, that type of thing. So that's where I'm at the moment. I'm looking at it on that level, that we're basically seeing the change slowly occurring, and it'll evolve, and you're not going to see the world coming to an end. Yesterday they were slamming down the stock market and so forth. Not slamming, you're just pressuring it down. It's not even as volatile as it could be. Let's put it that way. Um, we've seen markets way more volatile than this throughout our lifetime. Matter of fact, at the beginning of the COVID situation. Marcelo, hey, how you doing? Good morning. So, I'm not that concerned or nervous of what we're going to see when it comes to inflation. Yesterday, we were talking about we were looking at copper and silver, and thinking how much they may be emphasizing something we didn't realize. Maybe they're part of the, I guess you could say, the process. But at this point in time, um, we're looking at it on that scale. We're looking at it and we're saying, okay, they're going to raise some rates. There was a rumor yesterday. I guess it wasn't a rumor. Ballard came out and said that they should raise rates a whole full point. And yeah, copper. Yeah, we were looking at that yesterday. We found that to be very, fascinating in the sense of the strength in it, the way it was acting. In my country, is a copper market mover. Oh, okay. Are you from South America, like Chile or something like that, or are you in Australia, or where are you from? AAA copper. I like that. Yeah, copper is becoming something interesting. Matter of fact, we can jump over to it real quick. We usually start off with Swiss, looking at how the markets are moving. Here, you can see, the dollar is firm. Not too wild, but chilly. Okay, yeah. Let's take a look at copper. We're going to show you what we were talking about yesterday. We found it to be interesting myself. At least I did. I thought, wow, I think we got a character. We follow the different movements of many products, and we saw this pop here when inflation is a scare. Whereas here's the 30-year Treasury bond. You can see they're knocking it down, right? And what's copper do? It stands out and says, "Hey, we're going up in value." And you could see they tried to knock this product down for a week and a half. They kept on trying to knock it down, and then it finally pops. We're in a weekly buy. You can see for a while here. Oh, you can't see that. Let me do this. There it is. And so you can see, when this popped, after trying to get knocked out over the last couple of days, we thought to ourselves, something's brewing here. And when we saw, like, at the same time, we were looking at the 30-year bond, the interest rates, watching the interest rates drop, and here we're watching the strength in copper kick out, and we're thinking, what does that mean? We saw this wild pop in silver, and they're cousins to each other. When you're mining copper, you find silver, or so forth and so on. And we're seeing that same thing in the silver. And we're thinking, what is it really trying to tell us? It's telling us something, that's for sure. It's a very predictable market in Chile, I bet, because I think you're what, the second, third largest producer of copper, or the first largest producer. It's, I guess, what, Canada, the United States, Australia, Chile. I'm sure there's a few other places that produce copper, but they're the most predominant, aren't they? And I know that the economy, it's at one point copper was the number one part of the economic structure there in Chile, right? Peru too. Okay. Yeah. So I was wondering yesterday. We saw this action in it, and our math keeps us pretty honest, So I thought, maybe something's brewing here in the sense of, I said yesterday in our webinar, I don't know if you watched the video from yesterday's webinar, but we're like looking at, this is copper for like the last year, basically. Right there, you can see it. And it seems to have established a range in the $4 area with no problem. Remember all those years we were trapped between like $2.75 and $4 over the beginning parts of the quantitative easing era? And now it seems like it's jumped up into a new level, and it doesn't seem like it wants to go down. It just has that look like it may be more of an inflationary signal, and also established a whole new range. Now, I wonder. Are we going to see $3 copper again? I kind of doubt it. Let's see. A correlation between copper and USD clip is negatively usual. CLP. So it's dollar. Oh, is that the Chilean currency? I'd imagine. USD. Let's see. Let's see if we can get this on J4X. Let's see. USD. Let's see how we do this with currency. See, /CLP. Interesting. It didn't come up. Where's that? Let's try that again. So let me do it in caps. USD / C. So I see Swiss. Well, here we go. There's more. Chinese yuan. The Czech krona. What's up with the South American currencies? It seems like it's hard to find them. I can't even find a Brazilian real. It's really odd. Okay, let's see. So it's negatively usually, so you said comment, but now that the correlation is broken because of the elected president from extreme left. Yeah, I've heard about that. So everyone is moving dollars out of the country. You will not find it in Forex. Yeah, I can imagine. We see the same thing with the Brazilian real too, in the sense of it's really hard to, we watch the ETF, and it seems to be the real tool in the end. But yeah, I can imagine. You're seeing it very close. We hey Martin, how you doing? So yeah, that's I don't know. I see something going on with the last year with copper, and I think it's starting to make sense now. I might be wrong. Maybe did the left say they want to get rid of copper or something like that too? Isn't that true, Marcelo? Didn't they suggest that they really wanted to walk away from copper mining? Maybe that's a pressure point right there alone. That could be putting that pressure on the copper also at the same time. You know, that could be part of it. But I was just disappointed over the last 6 months that we knew that inflation was here, even when Mr. Powell would not admit it, and we couldn't get any real strength in the metals market. I was really disappointed with that. Is that what it is? They want to nationalize everything. Well, yeah, they always want to nationalize things, don't they? What's up with those people? What if they're not hungry to nationalize things? Why don't they just go out and start their own businesses? But no, they've got to try to torture everybody and make them live their psychosis. But anyhow, yeah, I saw that yesterday and thought about it, and it became a real strong part of the webinar yesterday, the March copper and the silver. Smart, smart. Yeah, I mean, I follow it a little bit. Just I follow it more than the average American. Let's put it that way. And I saw that coming too. I felt really bad that I couldn't believe it was happening. I mean, you went from left to strong left. I thought you were going to go from left to back to center, and instead you went from left to strong left. It's like, oh my God. So, I mean, there isn't a socialist country in the world that really does any real productive work. That's the amazing thing. I mean, look at the GDP in Germany. It's a mess. A country like that used to be a great industrial power. It's a mess. It really is. Barbecue paradise, huh? They have a lot of cattle down there, right? I mean, you got what, Argentina to the left of you, heading towards the Atlantic. Uruguay, isn't that to the right, south of Chile? And cattle country. Yeah, it makes sense. I'm a big barbecuer. I like barbecuing. Oh, Uruguay's on the edge of Argentina, right? That's what I thought, but not on the Pacific side. It's on the Atlantic side. Okay. So yeah, I mean that's a lot of cattle country, right? So I mean Argentina, uh, you know, I've been. Have you been following what has happened to Turkey and the free puts they're giving out and how they stabilize their currency? I'm wondering if that's going to be a new way of dealing with um, uh, the South African currencies. That's what I was thinking. That could be a whole new doorway, uh, for dealing with, instead of going bankrupt for X amount of years, instead just give free puts out. Yes, there are more cows than people here. Yeah, my town used to be the same way here. Yeah, I don't know if you've been following with, on our webinar here, we look at the Turkish lira, and Turkish lira has gone from 1 to 18 against the dollar. And then it's gone from 1 to 21 against the euro. So, I mean, that's like hyper inflation. That's like South American inflation. And finally, about 2 months ago, a month and a half ago, Turkey started giving out free put options to buyers of Turkish lira. And it has stabilized the currency. And I was wondering if that might become, so what you do is you just basically tax the population. They're already taxing the population. So you tax the population to reward people who buy your currency, and that's this way they can stay invested and keep the assets there. Let's see, Argentina is ruined. Not much on weekdays. Let's see, what, barbecuing? Scalping requires a lot of focus. Yes, but more than that is scalping. We do scalping here every day, and we do option trading and position trading also. And scalping takes consistent work, like a footballer. In other words, you have to practice over and over again. Keep on working on your tools. stay focused, stay with the rules, and scalping is pretty good. What is Turkish doing? Here, let me show you. It's very fascinating. Let's put it up on the screen here. Here is, let's see, let's go to, there's the Turkish lira against the dollar. I'm going to show you both of them. We start off with the dollar normally. There's the Turkish lira there. Okay, now we're going to show it to you here. Usually we get there by about the fourth currency. But you've jumped in, and I answer all questions and have conversation about all things. So I don't have much of a problem not staying with the Swiss franc and going to the euro and the British pound before that. Okay, so here we go right there. Here's dollar Turkish lira. Now what they did is this. Let me make this bigger for the moment. And this is the Turkish lira. It's been on just one rampage inflation explosion. You can see here it's going from nothing down in here in the like the sixes all the way up to the 18 over the last 3 years. And 3 years back from there, the product was trading at $1. Our 1.1 Turkish lira to the dollar, 1-to-1, and the hyperinflation. Now what they did is they declared this right here, this back here in December. What they did is they started giving free puts out. They declared that they would give free puts. It's a put option if you buy their currency. And it got clocked. It went from 18 all the way down to well, you can see the next day it went down to 11 and change, and traded as low as 10 and change. So it dropped like 40% in just a day, basically. And then it balanced out. At first I didn't think it was anything real because they didn't exactly explain what moved things. And then we read it after a couple of days. I read what they were going to do about giving out free puts. And I thought, wow, that's brilliant. So I said, then I took the highs here and the lows basically in here somewhere. I guess it is. Let me see where I can define it. And I thought, okay, this is going to stabilize. In other words, it's going to stabilize on these lows here of the 10 area, or the 12 area, in this case here, or 11 area, right around in here. I was thinking around 10.5, 11, and probably not go any higher. So I created this rectangle just to show that we really believe that it had a winning concept. And sure enough, it's locked itself in. It's become low volatility, and there's a steady currency value now compared to being at 18 and going higher. And I was thinking, this would be a great tool for the South American countries. In other words, instead of them just, declaring bankruptcy on and then refinancing debt, why don't they just give out puts on their currency, and that will keep money in the country. And then what will happen is that money will be invested, and it'll grow. Now, if Turkey can do that, I would think Argentina and Brazil and everybody else can do that stuff, all the South American countries that have currency problems. So, I mean, you got to figure they must have really bad currency problems if you can't even trade them in the open market. It's like the Chinese yuan, you can't. That's a fixed something that doesn't really trade, just is fixed, And they pretend that it's real, but I mean, when I say pretend, that brokerage houses claim that it's real, but it's just a fixed thing, It's kind of like the ruble was when it was at 4, and then the Soviet Union collapsed, and then it stayed at 4 for a while, and then it went to like 9, and then 13, and back to 9, and now we're at 70 something. So I figured Chinese yuan will go the same way if it ever went into a liquid market, it became a floating currency. So anyway, that's there. Now here's the better one of the two. This is the Euro Turkish Lira. And that's doing the same identical thing right there. You can see that right there, doing the same thing. It's locked itself in, it's calmed down, no more hyperinflation explosions. And so I don't know if you're comfortable with options or binaries, calls and puts, but a put, when you buy a put, it means that you can, it's like an insurance policy against whatever asset you're long in the put. So in other words, let's say you own dollars and you buy a put, and dollar goes down, your put goes up in value, and so it's a seesaw. You don't really lose much money at all. And same thing if you buy a stock. If you bought Amazon and bought a put, you bought Amazon at $3,800. Now I think it's at $2,700. You'd have $800 or $900 in your pocket, and from the put option, and at the same time, you'd still be long the stock. So, it's just it was a way of, I thought, to understand a better way of dealing with the South American issues. I don't know anything about futures. These are options. Futures are just a forward contract. So futures are identical to basically, the underlying. It doesn't matter. It's like a stock. It just expires over a certain period of time and does a delivery. That's about it. But an option is a little bit different. It is a limited risk. Yeah, now see, Forex spot doesn't expire, and it's just like a stock. It stays there until it doesn't exist anymore. The country's gone. So yeah, the futures and Forex and stocks are pretty simple. They are one is like the futures contract will expire after a certain period of time. You see, I'm totally ignorant of those instruments. No, that's all right. Let's see. Robin said, "Hey, Robin, how you doing?" I got the answer. Well, I can say this. There's one thing for sure, and that is that what Turkey did could be a way of bringing South America out of its constant issue of finance. In other words, where it has to has to declare a bankruptcy, and when they have to find a way to pay back the debt, and then they have to then they float more, and then it looks okay for a couple of years, and then it falls apart again. And this would be a good way. And what it is options are a limited risk tool when used right. And what it does is it allows you can buy a put, protect your Forex, and obviously the option expires also. It's just like a futures contract. It'll expires after a certain period of time. You can take delivery, or maybe it's worthless. It's one or the other. But if you pay, let's say you paid $100 for a put, the most you can lose is $100. So in other words, you can't lose like $10,000 by buying a put. If you paid $100 for it, you can't lose anything more than $100. If you buy a put for $500, the most you can lose is $500. If you buy a put for $30, the most you can lose is $30. And same thing with a call. If you buy a call for $30, the most you can lose is $30. Now, that's when you buy these things, and they're like insurance policies. They're governed by insurance law here in the United States. Hey, Jordan, how you doing? Happy TGIF is right. We're looking forward to a quieter weekend, that's for sure. I got too much work to do, actually. Robin and I are working on posting more of our data through the internet. So we have a list of websites like Facebook and so forth, and LinkedIn, and a few others that we're going to start posting more stuff on. But yeah, I mean, that's going to be our weekend. We're going to get, at least I'm going to try working on that. Doc, the fundamental problem of Latin America is not technical, is corruption. Right. Against that, you got no tools. Right. Exactly. So the only way to get rid of corruption is a stable economy. And obviously, probably the people in power don't want a stable economy. That's why there's always those bankruptcies of the governments, and they have to refinance their debt and all that stuff. You're totally right, Marcella. That is the problem. But this could be an answer. It could be a way of fixing some of the problem. It really could. But it's not going to happen overnight, of course, because you're right. I think corruption is extremely powerful in South America, unfortunately. I don't know what what else can you do is keep on trying to elect people, but you can see like what took out Mr. Trump in the 2020 was that company in South America in Argentina who fixes the elections. So yeah, you're right. They was it Joe Stalin used to say, it doesn't matter who votes, it matters who counts the votes. And that's probably the problem in South America, is who's counting the votes. And that company's probably influenced the Chilean elections now. So that is the problem. It really is. It sounds like a cybernetic feedback system. You know, for every great yield, there's a great sink. And I guess South America has become the great sink for the North American economic system. It's a sad thing there. Hopefully it'll change. But it's definitely, for us here, we look at the whole planet and the way everything is being used and traded, and the marketplace in general. So, and you understanding all the tools that you can use to protect yourself is important. You know, using binary options or flat out calls and put options, marrying them to spot market, so forth is. Or the stock market or the futures market is a better long-term investment strategy, and so forth. All right, and I guess let me finish this off. The logic out of all this was looking at the copper. We saw some characteristics like the way it's propped itself up this last year above the $4 area, and we thought this might mean something. Let's see, George says, yeah, same, was looking to work on the charts this weekend and study. Exactly. We're trying to get our charting system out more through the social media structure. So, but yeah, it really caught our eyes yesterday. I looked at that and we saw the copper and we thought something's, maybe we're seeing an established, look, we know inflation occurs every so often from bad policy or, basically it's bad policies, really, bad government policies and, strange legislation that hurt economies in different forms. And then, we've seen, we saw silver play in the $3 area and the $5 area, and then it slowly climbs up into the 10 or 15 or 20, and we saw the Hunt brothers take it to 50, and then it falls back into the low teens, the high singles, and then it vacillates back and forth. We see that, but now we're getting to a point now where we've seen gold do the same thing, where it broke the $500 into the $500 area, went back down to 200. It slowly reestablishes itself at higher ranges because metals complex does in many ways, it's a good long-term investment, especially the physical, it really is. Whereas on the shorter term, when you get invested in the metals complex, sometimes it's, it can really chase you back and forth, And so you have here this situation where copper now seems to have found a way to climb over the $3 area. Now it seems like the last year we're locked over the $4 area, and we're playing with the high end of the $4 area a lot of times. So we're starting to wonder, is copper really telling us more about inflation that we were seeing this last year than anything else? And even when they do straighten out the inflation situation, will we see like a 380 or 410 copper or 360? But at the same time, you have to look at what the fad or the nature of our industrial societies are now, and that is a lot more electrical devices, automobiles and so forth. And so if we're seeing that, you have to assume that copper may establish a good solid $4 base. That might be the answer to this all, because obviously if you're going to have electric cars and you're going to advance more electrical devices, you need to have copper for the armatures and so forth. So we're thinking that maybe copper is really telling us more about inflation and the industrialized nations across the planet than we realize. That's what hit me in the head yesterday. Does that make any sense to any of you out there? It makes sense to me, in that sense. And it took a while. Watching copper all of a sudden yesterday he said to me, "Hey, copper's really showing us that inflation is here, and it's been saying it, and we haven't been listening." Now I thought the inflation was here either way, but copper was making it very clear, whereas gold and silver are not. You know, and we're seeing the little pops in silver, but we're not seeing. I mean, gold's what, hanging out in the 18 area. Low 18s, mid 18s, not even the mid 18s, low 18s. I mean, the all-time high is like around 22. So I mean, what's its malfunction? You know what I mean? Same thing with was it silver? It can't seem to get its legs going either. Let's see. Oh, Marcelo says copper workers went to strike in Peru. Okay, and that reduces the production. That makes sense. Yeah, it does. And at the same time, everybody's talking about building more copper devices. Yeah, I can imagine. I've heard those stories where the strikes and the nationalization and all that stuff is just stalling it out. Even when, let's say, things turn better politically again, which they more than likely will, uh, I could still see a $3.75 to $4 copper. In other words, I don't think we're going to see $2 copper again. I don't think we're going to see $10 silver again. I don't think we're going to see $900 gold ever again. That type of thing. I think that those things have slowly grown into new ranges. I think that's where it comes down to. So that's where we are with the metals complex here today. We've talked about it that way. Might as well look at gold real quick, right there. And you see it bouncing, between 1775 basically and 18 and a half. So it's not exactly, runaway on any level. And here we're seeing enormous signs of inflation, and we're not seeing any real explosion in most of the normal metals sector minus copper. Copper is, doing it all. It's carrying the ball basically. And, I mean, this could be, in many ways we could be looking at three peaks in a dome, and this is the dome, but, to me, I don't really see, that's an old pattern that traders used to look for, a century ago. It's called three peaks in a dome. And when looking at this could be the dome, and copper might find its way back down to, this area here, something like the 400 to basically, what is that, 3, is that even 3? Yeah. I'm not sure what that was exactly, but let's see if we can get the low there. 380, 382. I could see that becoming the true bottom end of the range of that complex. In other words, it's telling us that in the inflation jump in metals complex, copper is telling us that it has happened. I think that's the best way to describe it. All right, we're going to jump back over to the currency, but if you want to see anything, just shout it out. We will go after it. And let's shrink this back down. Let's take a look at the euro this morning. There's the euro. You can see that weakening a little bit more in here. I think it closed in a daily sell yesterday or 2 days ago. Let's find it right there. There it is right there. Yeah, it's been a daily sell now for 3 days. This is the 4th day. That's what that little red line represents. But the real fact is it drops below this 0 line here. And when the white line and the histogram break below the 0 line, it pushes it into a sell. Just like when it goes above it, it pushes it into a buy. Goes into a sell, it has a tendency to go down. Goes into a buy, it has a tendency to go up. 85% of the time. Marcel says, workers goes to strike and set a condition, a bonus of $20,000 just to end the strike, besides all other benefits they get with negotiations. Yeah. Well, people are gravitating towards more electrical devices, so that means they need copper. And that's what it really comes down to. And that makes total sense. I mean, you strike when the iron hot's, they say. You make hay when when the sun shines and so forth, and in this case here, if the world is using more and more electrical devices, then obviously the copper miners probably should try to benefit from it on some level. And that's the name of the game, really. You can see it right there. That makes total sense. Let's take a look at British pound, the big sterling currency. Right there, you can see it's holding firm, not really lifting a lot. You can see, our white line is up. When this white line gets across, it has a tendency to go up. These are Hinky-Ashi bars. So it's an averaging of the open, high, low, and close divided by 2 or something like that. And so it kind of has a lagging characteristic, but it's definitely a good indicator that matches up to our dots here. Let's put up the British pound here. Right there, we've been in a daily buy for 2 days now. Closed in there last night. Let's put that line in there. What held it from not being declared in a buy the day before was the fact that we had a red and a green dot right there. And you can see, in this case here, 4 days back, we had a red hinky. And you can see 2 days in a row there with the red on our dots. And then it closed, and it was above the 0 line. And then the opening, as long as it stays above the previous day's close, it's safe to be long. Let's see. And so that's the action we're seeing here in the British pound. And that's kind of tied to silver to some extent. I'm sure sterling used to be more. It's hard to say what they're doing over there anymore, but in the end result is that that's why it was called sterling, because it was based off of silver. Backed by silver. That's what it is, backed by silver. And so you can see here, we're seeing that strength in British pound, but we're not seeing it in the Swiss or the euro. So the dollar is firmer there. And the dollar is really not moving much for all the inflation we're seeing. Chile has also a lot of lithium, the second after Australia. Do they let them mine the lithium? I mean, we have a lot of lithium here in the United States. They just won't. The environmentalists are blocking the mining of it. But that makes sense. There's a lot more lithium in the world than people realize. But there are very few places that allow it to be mined. Somewhere in Africa, and I'm not sure if Australia. I guess Australia does because the Chinese mine it from there. I think and the Chinese, they're the battery technology. That's the whole key right there. And so you can see here with the currencies, the dollar and the inflation factor seem to be nowhere near as dire as what everybody's thinking. And I would say that's the quantitative easing. I mean, even when they have to tighten, what they're really doing is they're just reducing the propping up. So in other words, right now, the Federal Reserve is still buying bonds. They're still putting money, fresh, new money into the market as much as they say they're going to cut back. They haven't. And so they're going to try to raise some rates. And you know how much the bankers hate that, the central bankers, solely because, the politicians have been borrowing and spending. And so that means that they're going to get charged something. They hate that idea. I mean, there's 14, 15 trillion in the world that's being traded as a minus. So in other words, the governments borrow that money, and also they get paid interest to lend it to them. Or no, how's that work? I say. So in other words, most of the country, a lot of countries the government bonds are trading for a minus, no interest on return, and you have to pay interest to buy the bond at the same time, which is close to insanity. Could be one of the more crazier things of the 21st century that in future years people are going to go like, where were their heads at? Who was stupid enough to do that? But there's like 14 trillion invested that way. It was a process to prop up the collapsed financial system of Earth. Earth's financial system collapsed and put the United States into a very strong position of not having to be responsible for the first time. I mean, for a long time, we were always responsible. Now, we've lost our minds. And that's not going to last long. We've seen government changes so dramatic of late that it's going to really change things even more in a positive way, probably for the whole globe, where financial markets will be better. Governments may catch the fever of being more responsible. I know this sounds like unicorn wishful dreams, but yeah, that could be a possibility around the corner, very close by, because these politicians and these socialists in particular have gotten really crazy. All right, from there, let's jump over to the Canadian. Right there. And Canadian doing the same thing, kind of got that, we thought that we talked about it yesterday, we thought that this dead stuff right there was because of the CPI and the inflation. And we thought maybe they would break out of it, but I don't think they can. I really don't think they can break out of this at this point. I think that, with quantitative easing, as long as there's quantitative easing, there's no reason to panic, and think, oh my God, the world's coming to an end. So they were selling a little bit more. Not buying as much, rotating. We always look for a little top out in February, so I guess that's what we're seeing now. This is the topping out. Maybe they go back and challenge the lows in the equity markets. It's a good possibility. And when looking at the Canadian here, you see it's going sideways like the rest of them, just like when we look at Swiss and so forth. Just take a look at Swiss one more time here. There's Swiss. And when we tighten it up, it's at the top end of its range. We found a lot of these currencies have been trading in ranges for a couple of years now, and we seem to have them labeled pretty fairly. When they break out of the range, they seem to fall right back into the range and then, find a way back down to the low end of the range. But it doesn't happen in like a day or two. It takes time. And in this case here, you can see it's flirting with the top end of the range again. But, it's been... In this case here, it's been bouncing off of the middle of the range more for like the last 3 or 4 months. Not willing to go down to the low end of the range. All right, from Canada, we look at energies. You can see Canadian is down for the day. And you can see it on the J4X will be catching up in a little bit. You can see the green hinky at the moment after the reds there, right there. You can see the line is down at the low end of the range, but you can see our math is starting to roll. So if it stays like that for another hour or two, the J4X will join in again and match up with it. Now, from there, we'll leave Canadian up, and let's just take a look at the oil market. Where's that mouse at? There it is. And let's go like that. There's Canadian to the left on J4X. And let's take a look at the oil market here. There's crude oil spot. You can see it's moving up in value. That's normally the way it goes. When Canadian is moving down, then usually the oil is moving up. In this case here, you see it better through the Chicago Quant chart at the moment. Because we use Hinky-Ashke bars, which again don't show you the action, but you can see there's just a little pressure there. You see our line is also trying to break down. And J4X will join in with that soon. All right, from there, due to that, we also take a look at gold. And let's see, where's gold at now? This morning, at one point, it was down like $9 or $10. Now it's trying to battle its way back up. And you see it right there, trying to push back up. You can see we're trying to climb back into a weekly buy. Like we did back here, there was the weekly buy. It went into a sell just for a week and a half and then back into the buy again. And then went into the sell up in here. You see it went down and now it's trying to climb back up. We went into a daily buy there. That's a daily. This is the weekly down below. You can see the strength right there from it when we go into our signal. And in this case here, we zip over to the South African Rand. Right there. You see it's pressuring itself down now, which makes total sense because the gold has been firm. Now, no doubt today it's not. You would, I have to laugh. You would think that there is no inflation with the way gold and silver move. But one thing's for sure, copper is making it very clear there is inflation. And then we go over to here, the South African Rand. I just saw it. Where'd it go? There it is. You can see it's trying to press down. It was down yesterday, and then they knocked gold down, and now it's doing it again. It's trying to move down again. You can see it's been a daily sell for 3 days now since right there. Let's widen that out a little bit. The sell line in there. We put the lines in there just to make it easier for people to see. Right there. So went into the sell there, and the next day it did roll over. And we're in a weekly sell since up in here this week. We put the line in at the end of the week there, for those that are watching our math here and so forth. And so that's pretty much the reason why we put that title out yesterday about the copper and the silver. Without a doubt, copper is telling us that the inflation is here. Hello. Not transitory, but I think it's going to be transitory. I think Mr. Powell was probably right, but he had the time schedule all wrong. I think the transitory is that it'll be gone in like 2 or 2 years. I really don't. I think we have. I don't think we're going to have like 1970s, 80s inflation, because I think government is able to change faster. Mr. Trump proved that very clearly. I mean, he had inflation down, had an economy growing, and it worked really well. I think we'll go back to that very soon. Happy weekend, Doc. Thank you, Marcella. I'm glad you showed up, and nice talking with you. I appreciate you stopping in. Happy trails to you until you and I meet again. That's how we end the show here, so I just thought we'd give you that one. So anyway, next one we take a look at is the ruble, which I think is literally a blueprint for the Chinese yuan. I really believe the Chinese yuan is going to go the way of the ruble. Now you can see here it's trying to bounce a little bit today. It's been in the sell for a bunch of days here, and you see the white line piercing and all that. And then over here, there's the ruble right there. Doing the same thing, doing its little bounce. And went into the weekly sell last week, and it was in a daily sell from here. So I went into the daily sell right there, and it was a nice ride down, and it joined in the weekly, and it was a nice little win there. I think we've made that pretty clear. We think that that's just trying to tell us that there is not going to be a war in Europe. There is not. It's just the politicians being politicians. Okay. From there, we go over to the yen. I think the yen yesterday almost touched the 5-year high. Let's see what she's doing today. And the high there is 34 at 1634, and I think this is 1635. Yeah, so it's just almost touched it. We've been in the buy for this movement here. We've been in the weekly buy since back here. So it's even with all these ups and downs, it keeps on finding ways to go higher again. See what it looks like over here on J4X. Right there. You see it's starting to curve a little bit because it is at the top end of the range. And the marketplace has been trying to, the yen, I don't know, I heard they put a 1/4 point on their bonds or something like that, fixing them at a 1/4 point. They're very organized that way in Japan. A 1/4% is nothing. You're talking about 0.25 of 1%. I mean, it's not that hard to borrow money and keep the world afloat. And that's pretty much what we're seeing now. We're seeing that. That's pretty much what it really comes down to, is that the world is afloat with cash generating inflation. Nothing major there. I mean, in the sense of it's not a surprise. All right, last currency we look at, unless someone else asks for one. And if Jordan's still around, we can go take a look at the GBP JPY. Here's Mexican peso. We figured that it's moving back down into the middle of its own of the old range. Right there. And you see that it's pretty much dead center of the range now. And this was just a political theater, I guess, to a great extent, between Canada, the United States, and Mexico. They had a conference, and this all got flipped out from whatever Mr. Biden said to them, and now it's falling back into its natural range again. Then, let's see, where else are we at this? Let's see, that's Mexican peso. Okay, so that's the end of our currencies. Okay, here you go, Jordan. Let's check out the GBP JPY. I like that pair trade right there. Interesting. Still in a buy. They popped it up yesterday and still holding on today. And the weekly is right on the edge. Look at that. I mean, I don't think we have the number running. Let me get that number in there so you can see it on the side. Let's see, was it black? I guess we go with the white. Put the white in there. Or maybe we should do the black. Get rid of the white. There we are. Let's see if we move this over. There we are. You see it's a +4 on the weekly right there. You see that? Let's see. Yeah. So you can see the +4. It's holding up in that buy by the hair of its chinny chin chin. And then over on the daily, let's put that one in there. We'll just do the same thing. Maybe we'll put the white in there. There we go. You see the white is at 80 over on the daily. So it's holding up 79 now. And so, it's that action is it's a very consistent, very solid currency pair. It really is, that GBP JPY. It really trends well. I think, what else can we say about this? I guess that's about it there. It's one of our favorites to watch. Whenever you're in the house, sometimes even when you're not in here, I take a look at it at the end of all the currencies. Just like if we have extra time, I just automatically can run right to it just to take a look and see. All right. From there, let's put it up on J4X too. I always like to see what it looks like there. Right there. It's flirting trying to get into the sell, but when it did this thing here, it's a little, again, this is a good tool, and it's one of the better tools out there. Matter of fact, one of the best tools, but still, it doesn't match up to Doc's mathematics. So, it keeps you, if you don't have Doc's math, this is the best tool right here, the Manhattan strategy right here. But you got to basically, you got to go with the best. When you're trying to trade, you got to use the best that you can find. That's the name of the game. All right, from there, we're going to jump over to, let's take a look at we've seen the metals. We've seen gold and silver and copper, and we've seen oil. Natural gas is trying to lift up a little bit, but then we're talking about a snowstorm coming into the East Coast here. As it is now on the higher time frame, yeah. You mean the GBP JPY? Yeah, it's doing a nice job. It is doing a very, very nice job. Should we you want me to put it into like a Tesla and see how it looks on a Tesla? Let's see, where's it at? There it is right there. There's the euro on a Tesla. So I went into there's a lot of choppiness in here in that. So, this was a good buy here. That was a nice buy. And this little sell was not a bad sell, but it didn't really go down much. And then there's your buy again, giving you a warning there. And it does this crazy thing, pushes you right into the sell whipsaws. You lose a little bit, and then pushes you right back into the buy again and gives you back what you lost. But unless you do it, okay, yeah, let's do that. There you go. Let's put GBP JPY in there. It could be fun. Good way to end the webinar, if nothing else. Let's see if it updates quickly. Settings, we're just going to do 1 day and then go back like that, and then let's put GBP JPY in there. Right there. Let's see how long it takes to calculate. Oh, there you go. That was fast. So it went into the buy right there. And it's still in the buy. Now it's playing with the sell. There was a good buy right there. And there's your sell from right here, is it? Or is it there? No, it's this one. The next bar it broke down. And then it started to lift back up a little bit. And then it went into the buy right here. And not bad. This intraday one with the Tesla is working pretty well. There's your buy there. And pushes it into a sell there and then right back into the buy for another nice little pop. Very sensitive and very good, you know. What should we label this webinar today? And we were talking about the copper again. Let's see. I see Giannis says. I just saw this, Giannis. Let's see. Let's see. Giannis said something else about. Let's see if that's it. Error. Please use a keyframe frequency of 4 seconds or less. Currently, keyframes are not being sent. Okay. Okay. Ingestion errors can cause incorrect GOP group of picture sizes. Okay, I appreciate that. Thank you. It looks like everything's all right. I can hear me and so forth. All right, let's do a title. So the title today, we talked about silver and copper again, but and there's no doubt it was definitely insightful. I would say inflation, to me, will be short-lived. I really don't believe it's going to be dominant. That's why I think the metals complex, for a couple of reasons, hasn't really taken off. And copper, the one thing that is reflecting inflation, is more of an inflation of industrial. But it has been telling us that that inflation is coming, and it sure is right there. All right. So everybody have a safe and smart weekend. We will catch you all on Monday. Oh, look at that thing falling down. Isn't that cool? That sell was a good sell. All right, everybody have a safe and smart weekend. We will catch you all. Same time, same channel. Happy trails to you until we meet again. Happy trails to you, to all our trading friends on Monday. Ta-ta for now. Thank you, Janos. You know, I really do. I think that I think our inflation is only going to last a couple of years. I don't think it's going to be like the 70s and the 80s because of QE, you know. All right, traders, catch you later.